According to the Altron Fintech Household Resilience Index for the second quarter, South African households are struggling with debt due to high interest rates. 2 years ago, households spent 6.7% of their income on debt. Now they spend 9.1%. This means people have less money for other essential expenses. And joining me with greater insight on the report is independent analyst Roelof Botha. Thank you for your time, Roelof. Now, the index for the second quarter, I mean, this is when there was still election risk and the formation of the GNU. Did any of that have an impact?
I doubt that very much. It was too early for that. Unfortunately, we have to wait until the Reserve Bank publishes its September quarterly bulletin before we can wrap up all of the indicators, because this composite index consists of 20 different indicators, each of which has a direct or indirect bearing on households' finances, especially the ability to earn income.
Well, let's talk about the indicators there that are still under pressure. I mean, really, what remains a dark spot for households?
Certainly, the one of the biggest points of concern is the rise in the ratio of household debt costs, which is essentially the interest on your mortgage loan and your credit card, etc., as a percentage of household disposable income. Now, this ratio, before the Monetary Policy Committee decided to follow these space shuttles and raise interest rates to ridiculously high levels, that was 6.7%. Now it is 9.1%. That is a huge increase. And I've done a quick calculation. If the household debt service cost disposable income ratio had stayed at 6.7%, then the frightening thing is that households would have had, since the beginning of this rate hiking cycle, more than 170 billion rand more to spend in shops, perhaps even to get rid of a little bit of debt, perhaps to make sure that they have enough money for a deposit to buy a house, because we see also that the Better Bond index of home loan applications is down as a result of these high interest rates. And the calculation takes it one step further. National Treasury has forfeited almost 43 billion rand as a result of these interest rates. And I'm convinced that if I send this document to them, they will whisper in the governor's ear, please lower interest rates faster and by a larger margin.
Roelof, I mean, you talk about the unwarranted hike in interest rates. Do you think that, because obviously that, the Reserve Bank says that is to tackle the, rising inflation. Do you think that we would have gotten to this level of inflation where we are right now at the midpoint of the SARB's target range if the SARB had stopped hiking interest rates sooner, or maybe not hiked at all?
Yes, that's a very interesting one. Well spotted. In fact, I've got very little doubt that if they had not hiked the rates beyond between 9 and 10% prime rate, so the prime rate went to 11.75, and I think most viewers know that there's a 350 basis point stable difference between repo and the prime rate. If they had not hiked it by this much, what would the impact have been on demand? Demand would have been larger. And that includes demand for South African manufactured products. Now, in the manufacturing sector, we are still battling with a lower level of capacity utilization than before COVID. And this demand would have raised that capacity utilization. And by definition, if you have done cost accounting first year level, you will know that that lowers the fixed overhead costs per unit of production. The irony is that if the Reserve Bank had not raised interest rates by so much, we would probably have had lower inflation a lot sooner, because the two main reasons for the increase, the spike in inflation in South Africa and all over the world, was the 720% increase in sea freight shipping charges and a 400% increase in the price of Brent crude oil.
Roelof, the index did improve in the second quarter. Is there anything encouraging in those numbers?
Really not much. it's a little bit early for the index to have captured the new mood of optimism, and hopefully the modest improvement in retail sales flowing from the Government of National Unity. There are really a lot of positive signs out there. The fact that the new Minister of Transport has established a private sector participation unit, PSP unit, in a department. She was there for a couple of weeks when she decided on that. This closer cooperation, I think, will bear fruit. Mm-hmm. It is just such a pity that we have missed a chance for better preparation for the new growth phase. I've got very little doubt that this index is going to start heading north after the November rate cuts. We will have rate cuts in November. If we don't have rate cuts in November, then I'm going to, I think the MPC members should quickly go to Weskoppies for a checkup, because really, that's what this economy now needs to get to 3, 4, 5% growth, perhaps in 2026 and 2027, is significantly lower interest rates. There's no reason whatsoever not to lower interest rates to much lower levels.
So would you say, Roelof, that maybe also this requires, because obviously the SARB decreased interest rates by 25 basis points, and there's an expectation for another one in November. Do you think also this could be an opportunity for them to actually even cut aggressively?
Well, absolutely. You know, I think many of the viewers will realize that our bond yield, the 10-year bond yield, which is the benchmark long-term interest rate in South Africa, and it has a positive relationship with short-term rates. Now, that interest rate has declined since end of April by 200 basis points, which means effectively that the prime rate today, as we speak, should not be 11.5, it should be 9.5. And if I'd been the governor of the Reserve Bank, it would be 9%, because we need growth. We need employment creation in this country, big time and quickly.
And just lastly, Roelof, obviously we did have this 25 basis point decrease in the third quarter. Do you think that the household index will actually have a significant improvement in the third quarter, or maybe that will only come for the fourth quarter?
I've got very little doubt that there will be an improvement. There are just so many indicators that are heading north. The AFHRI construction index has improved. The drive.co.za motor index, which consists of 12 different indicators, that has improved as well. Even the better bond index of home loan applications has stabilized and shows sign of improving. And I've got very little doubt that this will follow suit. It would just be a huge pity if the MPC if they do not use this opportunity to assist the Government of National Unity to get the economy growing. Because for every job we create in this country, you immediately broaden the tax base, so you address fiscal stability and you combat poverty if those jobs are created at the lower end of the scale.
All right. Well, thank you so much for your time and giving us insights on that index, Roelof. That was independent analyst Roelof Botha.